All right. Welcome back, everyone. We're diving deep today into a topic that, well, let's be honest, might sound a bit dry, but stick with us. Trust me on this.
Oh, absolutely. Definitely not the most thrilling subject on the surface.
No, but it's so important if you have anything to do with trusts, right?
Yeah.
Whether you're managing one or you're benefiting from one.
Huge implications. Yep.
Exactly. So we wanted to really get into the nitty-gritty of how UK and offshore trust income is taxed. And lucky for us,
Lucky for everyone.
you've got some excellent advice to pull from my pensions advisors.
They really know their stuff.
Absolutely. So before we get lost in the weeds, though,
Mm.
can you just break down the very basics here? Like, who is actually affected by trust income tax?
Yeah, good starting point. Basically, trust income tax affects both the trustees, the folks managing the trust,
Right.
and the beneficiaries, the ones actually receiving, benefiting from the trust.
So both sides of the equation.
Think of it, I guess, like a coin, right? Two sides, both sides. Both sides got to deal with the tax man.
Okay, a coin, two sides. I can visualize that. Now, I've heard that there are some specific rules, and this always makes me a little nervous, to prevent people from using trusts to, kind of dodge taxes,
Oh, yeah.
especially within families. Is that true?
Yeah, for sure. There are definitely what they call anti-avoidance rules.
Anti-avoidance, what a word.
It's a mouthful, right? But basically, the UK tax system, they don't mess around. They're wise to folks trying to use trusts purely as a way to avoid paying what they owe, especially if it involves family members.
Right. Well, no one wants to run afoul of the tax man, obviously, but it sounds like it's extra important to be careful when family's involved.
Yeah, you really don't want any nasty surprises down the line. It's best to be upfront and play by the rules.
Absolutely. Okay, so let's get into those rates. What's the current situation? What are we looking at?
Okay, so trust tax rates, they've been a bit of a moving target over the years.
Oh no, moving targets are never fun.
Yeah. Not when it comes to taxes. There have been some big jumps. Like back in 2004, for example, that's when the rate went up to 40%.
Okay.
And that's what we usually call the trust rate, right?
Right.
But then just a few years later, in 2010, it actually went even higher to 50% for some time.
Some. Wow, that's a big jump. I mean, why should our listeners care about these past changes?
Right. Well, because understanding how they've changed over time gives you some insight. You can get a sense of how the government views trust taxation and maybe even predict what might happen in the future.
Oh, that's interesting. So it's not just about the current rate.
Right. It's about the bigger picture. Like it helps you make informed decisions about managing your trust assets, planning for the future, that kind of thing.
Got it. Okay, so we know the rates have changed, but how do we even know if a trust, falls under these UK tax rules?
Right. Good question. So a trust is officially considered a UK resident if it meets at least one of two conditions.
Two conditions, what are they?
So condition number one, all the trustees live in the UK. Pretty straightforward, right?
Yeah, that makes sense.
But condition number two, it's a little more nuanced. At least one trustee lives in the UK. And indeed, the settler, so that's the person who set up the trust,
Right.
was a UK resident. But here's the thing. At a very specific point in time,
At a specific time, okay, now you've got me curious. What does a specific point in time actually mean?
it actually depends on what kind of trust we're talking about. For a will trust, so that's a trust created through someone's will,
Mm-hmm.
that specific point is the date of the settler's death.
Oh, I see.
Makes sense, right? But for a lifetime trust, so something set up while the settler's still alive, that specific point is, well, when they either established the trust or added funds to it.
So yeah, the settler's residency, you're right, that really does make a big difference.
It's a key factor.
Yeah. Now, this all gets even more complicated when UK resident trustees receive income from, outside the UK, from foreign sources.
Oh, absolutely. That throws a whole other wrench into the works.
It really does.
Yeah.
So what kind of foreign income are we talking about here?
Well, think interest earned on money in overseas bank accounts or rental income from properties abroad, dividends from foreign companies, even capital payments from offshore investment funds.
Offshore funds, those always sound a bit, well, mysterious.
Yeah, a little bit, right. And within those, you've got reporting funds and non-reporting funds.
Okay, so reporting and non-reporting, that sounds important.
It is because it affects how the gains are taxed. Gains from reporting funds, those are the ones that disclose their income and gains to the UK tax authorities.
Right, so they're being transparent.
Exactly. So they're treated just like any other UK asset, subject to capital gains tax, CGT.
Okay.
But for non-reporting funds, those gains, they're actually treated as income.
Oh,
And
yeah.
they're taxed at a current rate of 45%. That's actually down from 50% just recently.
Oh, so it's been changing even there.
It's always changing. Keeps us on our toes.
It certainly does. So much to think about. I mean, if we had to boil this all down, what would you say is the main takeaway for our listener?
The big picture here is that understanding all these nuances of UK trust taxation, it's essential really for anyone who's involved with trusts.
Yeah, absolutely. And it's not just about the rates, it's about all these other rules and types of trusts.
The potential pitfalls, all that.
So many pitfalls, so much to learn.
But it's all about making informed decisions.
Exactly. So now that you've had a glimpse, a taste of just how complex this world can be, how might this knowledge influence your future financial planning? And remember, if you're looking for more personalized advice, you can always reach out to My Pensions Advisors. They are fantastic. You can find them at info@mypensionadvisor.co.uk. Maybe next time we'll take an even deeper dive into those mysterious offshore non-reporting funds.
Oh, that'd be fun.
Yeah, definitely. But until then, keep learning and keep those questions coming.
Absolutely. Always good to keep learning.
Always. All right, thanks for joining us today.
Thanks for having me.
And we'll see you next time for another deep dive.
See you then.